By their own benchmarks, I reckon the first quarter performance of Tech Wabag was flattish. Revenues were down about 4% quarter on quarter. There was a 30% drop in EBITDA. Of course, EBITDA growth in a presentation that they do includes the other income, wherein the EBITDA numbers would look slightly different. We've stripped off the other income, and then therefore the EBITDA growth, according to our calculation, is down about 30% of the net profit, nearly doubles YOY. It'll be interesting to understand from Mr. Chopra, Rajneesh Chopra. He needs an introduction, of course, a global head of business development, about what could happen in the quarters to come on the back of what's already happened in quarter one. Great having Mr. Chopra. Thanks for joining in.
Good morning, and thank you so much for having me on your show, Neeraj.
The pleasure is ours. So can you sum up? I mean, like I said, there's a bit of a dichotomy in how we assess the numbers versus what you would have thought of it. But flattish revenue growth, was that penciled in at the end of last quarter?
I think we have been maintaining this, that we are looking at profitable growth. So whatever be the things, we have been focusing more on the EP and high technology orders. Now, EP and high technology orders do not have that C component. So definitely there will be a little impact of that. Other than that, we have one of the major contracts, that is of Sibur in Russia. Now that was on a hold, but I'm very glad to inform you and your viewers that now we have got the notice to resume that in July. And in coming quarters, you will see that contract also contributing substantially to our top line. Now, you mentioned about our EBITDA growth. Now, definitely there has been a substantial income which has come because of the currency appreciation. Apart from that, if you see, we have optimized both our interest costs as well as our finance charges, which is primarily come by better working capital management, controlling our overall debt, and in terms of finance charges, by controlling our utilization of our non-fund limits. That's probably the bonds and the guarantees, which is an integral part of our business. So all this put together has definitely contributed to this thing. But the other factor is the phasing of the projects. So in this particular quarter, we have been closing a lot of projects. So while we are closing the projects, we will have more expenditure and less of revenue at that point of time in a project. But going forward, if you see our order intake, we have bagged some very substantial contracts from Senegal, which is a desalination plant funded by JICA. We got a Reliance order, which is again a desalination. We have this GMN, which is Ghaziabad Nagar Nigam, which is a HAM project, again, recycle and reuse. So we find that going forward, all these contracts will start contributing because they will be at the initial phase and they'll contribute more to the top line. And by the end of the year, we see a substantial growth as far as the top line is concerned. At the same time, it will be our endeavor to exhibit a profitable growth, where in terms of percentage margins, our bottom line will grow faster than our top line. That's the intent. That's a strategic intent which we are following, and we are pretty hopeful that we'll be successful in that.
What about the operational metrics, Mr. Chopra? Because, I mean, like I said, if I strip off the other income, then there has been a margin decline. Is this input cost pressures which are playing out, and have they started coming off a little bit starting quarter two? Can you talk a bit about it?
Yeah, definitely what you say is very true. We could exhibit this, there's a slight, relief, but maybe going forward, we'll find a better relief on the commodity prices. It's already started tapering down, but our escalation covers around 60 to 70%. So if we are almost there, probably we will have a much better matrix as far as going forward our margins are concerned. At the same time, we had a lot of issues on the logistics, especially because of Russia-Ukraine war and so many other things. I think that started easing out. We are pretty confident that these things will definitely help us, exhibit a better performance going forward.
You reckon 5% odd could be sustainable margins? Could you get back to those levels?
We are quite hopeful of that.
Quite hopeful of that. Okay. Now, there's a positive surprise in what you told me in your answer one, which is because I think at the end of fourth quarter, you had mentioned that momentum in the first half may be weak due to the lack of contribution from Russia. I hear you say that it will start contributing quarter two itself.
Yes, I think your assumption is absolutely right. Not only
I just heard you, so that's why I'm asking you.
Yeah. So no, not only this, Russia. You see, execution started happening in our Reliance order, in our Senegal order, and even in our Ghaziabad Nagar Nigam order. These are the three major technology orders, and we find that going forward, this will start contributing.
Okay. You mentioned, of course, on the numbers of order book. I think there is no questions on the order intake per se. Just wondering, do you anticipate the bidding for the Chennai desalination plant to happen at some point of time in the second half, or could it even happen in quarter two? Any updates there?
Yeah, Neeraj, we have already submitted our bids. There were 4 pre-qualified bidders. 3 bidders have submitted the bid. We are one of them. And I think all the bids are under evaluation right now at the technical stage. We hope in next couple of months or maximum quarter, I think the technical evaluation will be over, and post that, definitely it will be the commercial offer. And we are keeping our fingers crossed and hoping for the best.
Indeed. Mr. Chopra, just a business question. Do you sense that there is any kind of, how do I say, easing in capital availability, better conversations with clients, despite, because the last 2 months have been rife with lack of capital and conversations around how the world could be in a serious issue around recession, with inflation numbers cooling off. If indeed central banks go a bit slower on the rate hikes, that might just aid a little bit of sentiment. So do you sense a change of sentiment in August vis-a-vis what was there in the previous 3 months, or no, not quite?
I think we have not seen that really impacting us, because I think there's no dearth of capital available today also. Even during, especially in the geographies where we operate, I don't think capital has been an issue. Now, definitely you are talking about an interest hike. I think that will be applicable to one and all. So as and when that happens, I think we have a strategy in place how to counter that and still protect our margins.
No, sorry. What I meant was that if indeed central banks go slower on interest rate hikes, then are client conversations improving a little? Not that your order inflow is bad. I'm just trying to understand that. Do you reckon that while you will anyways do well, could it get notched up a percentage point or two better, because businesses around the world might be becoming a bit more confident than what they were 3 months ago?
I think definitely the confidence has improved. In between, there was a dent, especially because of this Russia-Ukraine war. Now, as far as interest rates are concerned, I think by and large we find that whatever was to be done, it's already factored in. And we don't expect any further interest hike as far as Indian market is concerned.
Okay. So before we wrap up, double-digit growth was guided at the start. I reckon that you believe that would continue to remain the case.
Yes, definitely.
Great. Okay, Mr. Chopra, we'll leave it at that. Thank you so much for taking the time out and talking to us.
Thank you so much, Neeraj.
Yes, thanks for tuning in.